Hey guys, this is a weekly forecast for January 30th through February 3rd of 2023. Today we're going to cover two new biases, one on the dollar Swiss and the other on a new pair, the CAD yen. And be sure to check out the section where I review the biases that formed on the dollar Swiss, because knowing what a pair has been doing in the past is going to provide you a context to better understand what's happening now. And moreover, it'll give you a bit more grasp of what a currency pair is likely to do in the future. Okay, so let's start with the dollar Swiss pair.
Alright, this is a monthly chart. We'll start off with an overview. So since about 6 months ago, there were consecutive rejection candles that formed right here that created the possibility for a long-term short trend to form. However, the following month, price came right back up to that pivot high, and thus eliminating this possibility of that long-term short trend. And moreover, as price is falling down to these levels, for the time being, there are no signs of strong short strength. And so in the long term, I'm long biased right back up to this pivot high right here. And moreover, just recently, there was a daily short trade that formed in this area and a daily long trade that formed in this area. And I'm currently waiting for the lower time frames to confirm the direction of this daily bias. And so in the short term, I'm neutral biased. Okay, let's talk entries. Okay, this is a weekly chart. Let me run you by what's been happening on this pair for the last couple of months. So back in April of 2022, right at this point, there was a short trade that formed. And then about a month later, there was a weekly long trade that formed. Now this short trade was stronger than this long trade, so the bias was short. Or in other words, price was likely to reach this pivot low before reaching this pivot high. And that main target was hit right here. And then another 2 weeks later, right at this point right here, there was another long trade that formed, which was this time stronger than this initial short trade that formed right here. And so the bias became long. Or in other words, price was likely to reach this pivot high before reaching this pivot low. And so throughout the following weeks, price went up to that main target and hit its main target. And then after that main target was hit, there was actually a daily short trade that formed right in this area. And on the daily chart, the last long trade that formed was right at this pivot right here. Now that daily short trade was stronger than that daily long trade. So the daily bias was short. Or in other words, price was likely to reach this pivot low before reaching this pivot high. And although price pulled back just to 1 pip to that stop loss level, price did not reach it and came right back down to hit its main daily biases target right here. Okay, you want to remember, when you're trading with biases, there are times when price pulls back to 1 or 2 pips to the stop loss level. But as long as that stop loss level is not touched, the bias remains intact. Okay, and one of the great things about biases is that precision in strategy. Because having a 1 or 2 pip stop loss really allows you to take advantage of leverage. Okay, and after that daily target was hit at this point, there were no new biases that formed throughout the end of last year. And finally, last week, there was a new daily long trade that formed. And this week, a daily short trade formed right here. And so I'm waiting for the lower time frame confirmations to confirm this bias. So first, let me show you the daily long and short trade that formed in this area. Let's go over to the daily chart. Okay, so on this daily chart, that daily long trade formed right here. And the daily short trade formed right here about 3 days ago. So the risk parameters for this daily bias is between this pivot high and this pivot low. And what we want to figure out is whether price will reach this pivot high before reaching this pivot low, or vice versa. Okay, and the first thing we want to do in order to figure that out is figure out how much long strength there was on this long trade and short strength there was on this short trade. Okay, so let's go do that. Let's go over to the monthly chart. Okay, so on this monthly chart, that daily short trade formed roughly in these areas right here. And the daily long trade formed in this area right here. Now let's first figure out how much long strength there was on that daily long trade. Okay, so we have these two gaps, one small one right here, and a mini one right down here, that are both providing long strength for that daily long trade. However, that daily long trade's candle is running right into this medium gap right up here. That's this gap right here, which is actually providing short strength for this daily long trade. Okay, so in other words, we have to subtract this short strength from the long strength created from these two gaps. Okay. All right. And you want to remember, when it comes to the strength of gaps, it's all about the width of the gap. So the wider it is, the stronger it is. Okay. And now seeing that this medium gap right here is bigger than both these small gaps combined, this daily long trade has negative long strength on it. Okay, so let me show you the levels for these gaps. Okay, so this medium gap's upper level is at 0.9237, and the lower level is at 0.91852. And this small gap right here, the upper level, is at 0.911512, and the lower level is at 9138.3. And finally, this mini gap's upper level is at 0.90864, and the lower level is at 0.90800. Okay, so now that we know that there's negative long strength on that daily long trade, if there's any positive short strength for that daily short trade, well, that means there's more short strength than long strength for that daily bias. Okay, so let me get rid of these. So there's two elements that's providing short strength for that daily short trade that form roughly in these areas. Now that's this medium gap right here. And moreover, there's a weekly trend line that's also providing short strength. Okay, so seeing that there is short strength for that daily short trade, we already know that that daily short trade is actually stronger than that daily long trade. Okay, and let me also show you that weekly trend line I was talking about. Let's go over to the weekly chart. Okay, so on this weekly chart, that daily short trade formed in this area. So try drawing this trend line from this pivot to this pivot right here. As you can see, there's 1, 2, 3, 4, 5, 6 touches on it, which is more than the minimum of 3 touches that's required for a legitimate trend line. Okay, so this weekly trend line is also providing short strength for that daily short trade. Okay, and also remember that trend lines do not have to be attached to major pivots like this pivot to this pivot, right? As long as the trend line rules are intact, you could attach it to a pivot right next to it, like this, right? Just like in this case, we attach the trend line from this pivot to this pivot right here. All right, so let's go back to the daily chart. Okay, so on this daily chart, that daily long trade seems to be weaker than this daily short trade. So for the time being, this daily bias seems to be short, or in other words, price is likely to reach this pivot low before reaching this pivot high. And so in other words, the stop loss is at this pivot high, while the main target is at this pivot low. Okay, but you want to remember that the lower time frame confirmations always have the ultimate say in terms of biases. So let's go ahead and see what's happening on the lower time frames. Let's go over to the 1 hour chart. Okay, so on this 1 hour chart, that daily bias's risk parameters is between this pivot high and this pivot low right here. And in terms of lower confirmations, first of all, try drawing this trend line from this pivot to this pivot right here. Now at this point right here, we had a breakout and immediate break back in, confirming normal short strength. However, price coming right back up to that pivot high to create strong long strength. Now typically this strong long strength would confirm that daily bias to be long. However, in my opinion, like we've been seeing lately with lower confirmations, the distance between each pivot is slightly not even enough to be legitimate lower confirmation. And keep in mind, the distance between each pivot doesn't have to be exactly the same distance, but it has to be relatively equal. Okay, so if this first pivot right here was actually placed at this level right here, well, that will make it relatively more equal, right? Okay, and like I always say, a general rule of thumb when it comes to lower confirmations is that if you have any slight doubt of the legitimacy of it, you should rule it out at that point. Okay, because biases form all the time. Okay, and the reason why I pay attention to the aesthetics of a trend line when it comes to lower confirmation is because a lower confirmation trend line must be a trend line that is obviously seen by many other traders. Okay, and that's why a breakout and a breakback in has significance. Okay, because if it was a trend line that nobody sees, like this one right here, a breakout of that does not have much significance. Okay, so let me show you a trend line I'm looking at to further see if we could get some lower confirmation. Okay, try drawing this trend line from this pivot to this pivot right here. Now price come down to this trend line and give it another test or two, then break it out and immediately break back in. That will create normal long strength. However, price could come right back down to that pivot low. That will create strong short strength and confirm that daily bias to be short, or in other words, price is likely to reach this pivot low before reaching this pivot high. Now in terms of lower confirmations confirming that daily bias to be long, for the time being, there are no obvious trend lines that can be used to confirm long strength. Okay, but keep in mind, I'm willing to take long and short trades for this daily bias as long as the lower confirmations confirm it, and I'll keep you guys updated with that on the midweek analysis. Okay, so let's go on to the CAD yen. Okay, and if you're having trouble understanding what I'm talking about in terms of biases and lower time frame confirmations, please check out my forecast manual, which is an instruction book that helps you better understand these forecasts. So if there's a term or a concept you don't understand, you could look it up in the manual. Okay, and the link for that is in the details section of this video. All right, this is the monthly chart. We'll start off with an overview. So since there was a breakout, an immediate break back in right here of this trend line from this pivot to this pivot right here, which created normal short strength. However, 2 months later, price came right back up to that pivot high to create strong long strength. But that same monthly candle ended with a nice rejection candle, which overrided that strong long strength that was initially created and forcing price right back down to that pivot low. And for the time being, current price isn't really showing signs of strength in either direction. And so in the long term, I'm neutral biased. And more on the daily chart, since there was a short trade that formed right here and a long trade that formed in this area right here. And I'm currently waiting for the lower confirmations to confirm this bias. In the short term, I'm also neutral biased. Okay, let's talk entries. Okay, so on this daily chart, the last short trade that formed was right here. And the last long trade that formed was right here about a week ago. And so the risk parameters is between this pivot high and this pivot low right here. Now let's first of all find out what's providing short strength for this short trade and long strength for this long trade. Let's go over to the monthly chart. Okay, so on this monthly chart, that daily short trade formed in this area, and the daily long trade formed in this area. Now in terms of short strength for that daily short trade, we have 3 gaps right here, all providing short strength. Let me go ahead and show you the levels for that. Okay, so this first gap's upper level is at 98.12031, and the lower level is at 97.8395. The second gap's upper level is at 97.3180, and the lower level is at 97.1977. And this third gap's upper level is at 96.9870, and the lower level is at 96.7966. Okay, so these 3 gaps are providing short strength for that daily short trade. And now in terms of long strength for that daily long trade, first of all, we have this trend line from this pivot to this pivot right here. Again, it's legitimate because it has 3 touches on it. And moreover, we have these 2 gaps right here providing long strength also. So let me show you the levels for that. Okay, so the upper level for this top gap is at 95.7136, and the lower level is at 95.1304, and the top level for this lower gap is at 95.3124, and the lower level is at 95.11193. Okay, so there's 3 elements providing short strength, while there's also 3 elements providing long strength also. So the strength differential between that short and long trade is relatively even. But for example, if there were more touches on this trend line, making it stronger and stronger, that would have made the strength of this long trade stronger. However, in this case, since this trend line only meets the minimum requirements for a legitimate trend line, it does not produce that much strength long. Okay, so in a case like this, when both the short and long strength is about equal, we want to bypass this initial phase of analysis and go straight to lower confirmations. Okay, so let's go ahead and see what's happening over there. Let's go over to the 1 hour chart. Okay, so on this 1 hour chart, that daily bias's risk parameters is between this pivot high and this pivot low right here. Now, first of all, try drawing this trend line from this pivot to this pivot right here. Right at this point, we had a breakout and immediate break back in, which confirmed normal short strength. And then in the next day or so, price tried to go up to that pivot high to make strong long strength, but failed to do so, came right back down and attempted it again. Now, if price could reach this pivot high right here, that would show that the long strength overrided the normal short strength provided right here, and thus create strong long strength and confirm that daily bias to be long. Or in other words, price is likely to reach this pivot high before reaching this pivot low. So the main target for that daily bias will be right here, while the main stop loss is at this pivot low. Okay, so even if price does reach this pivot high to create strong long strength, I'm still going to need a nice pullback right back down to these 95.50 levels, roughly in these areas right here, to give me a good risk reward for a long entry. So in this case, that would be about 100 pip stop loss, because the stop loss level is at about 94.50. So the risk will be about 100 pips, while the reward will be about 300 pips. Okay, so we'll just see what happens with this one, and I'll keep you guys updated on the midweek analysis.
Okay, so many of you may be wondering why I analyze a bias through 2 stages, with the first being through price elements on the higher time frames, and then further with lower confirmations. Now, to get straight to the point, it's because the analysis value of price differ from candle to candle. Now, in order to know which candles have more value in terms of analysis, remember this basic concept. Current price is more valuable than past price in terms of the analysis process. Now, since the initial price element analysis of a bias uses past price, its outcome is valued less than the secondary analysis of lower confirmations. And so although the analysis using past price does help in predicting the direction of a bias, since the lower time frame confirmations uses current price for analysis, they are valued higher in terms of predicting the direction of a bias. So to sum up why I use two stages to analyze a bias is so I could first have a basic outlook of the direction of the bias, then further confirming that direction using current price. Okay, so I hope this helped clarify biases for you guys. And if you have any further questions of why I analyze price the way that I do, please leave it in the comment section. Okay, so that's it for the weekly forecast. I hope you guys have a great week, guys. Thanks for watching. Okay, bye.